This week, crude oil erased its entire war premium in 5 days. The geopolitical panic has rapidly unwound, leaving markets to refocus on secular tech growth. Welcome to the D-Risk Weekly Global Markets Brief. It's Saturday, July 11th, 2026. Our theme of the week is the geopolitical unwind. The biggest dislocation in macro markets right now is how quickly traders discarded Middle East escalation fears to chase the artificial intelligence rally, completely ignoring the structural breakdown in commodities. Alex, let's start with the international picture, Asia and Europe.
Thanks, Sarah. The geopolitical unwind is creating sharp regional divergences as markets digest the lack of fresh escalations. Starting in Asia, the Nikkei slid 1.70% on the week, closing at 68,558. Despite the weekly drop, underlying demand for Japanese technology remains robust, keeping the index above its key moving averages. Conversely, the Hang Seng surged 3.53% to close at 24,175, fueled by global enthusiasm from the SK Hynix IPO. However, this is purely a technical relief bounce. The structural posture remains broken as a death cross actively suppresses the market. The 50-day moving average at 24,902 sits firmly below the 200-day at 25,847, confirming the broader downtrend. Moving to Europe, both the DAX and FTSE slid this week in a quiet news environment, driven by routine profit-taking rather than fundamental panic. Germany's DAX slid 2.76% to close at 25,067. Meanwhile, the UK's FTSE 100 slid 1.70% to close at 10,497. Despite the near-term weakness, both European indices maintain their long-term bullish structures. Sarah, the international data implies that when geopolitical noise fades, underlying technical realities quickly reassert themselves.
That sharp contrast between Europe's quiet profit-taking and Asia's AI-driven volatility perfectly captures a market searching for its next fundamental anchor. If international equities are shaking off geopolitical fears to chase semiconductor momentum, is the U.S. tech sector leading this aggressive risk-on rotation, or are domestic indices showing signs of exhaustion? Alex, break down the U.S. and cross-asset signals.
The U.S. tech sector is absolutely leading the charge, Sarah. The Nasdaq 100 futures drifted higher by 0.32% this week, closing at 30,032. The broader S&P 500 futures also drifted up 0.42% to close at 7,620. This tech-led resilience confirms our geopolitical unwind theme, as investors quickly absorbed Middle East anxieties and refocused on strong semiconductor capital expenditure signals. Looking at the plumbing, we are flying blind on the 2-year Treasury this week, so we will focus on the long end. The 10-year yield drifted lower to close at 4.54%, keeping restrictive monetary conditions firmly priced in. In the currency space, the U.S. dollar index drifted higher by 0.11% to close at 100.97. The greenback maintains a bullish golden cross, with the 50-day moving average at 99.69 holding above the 200-day at 98.94. The most critical signals are flashing in commodities. Crude oil surged 3.96% to close at 71, but this masks a dangerous structural reality. While a golden cross remains technically active, the price has collapsed well below both the 50-day moving average at 88 and the 200-day at 74. A golden cross with price below both averages is a breakdown condition, not a bullish confirmation. Meanwhile, gold drifted lower by 0.21% to close at 4,104, confirming a death cross as safe haven demand evaporates. Finally, the VIX plunged 5.11% to 15.03, confirming a broad relief rally as fear rapidly unwound. Sarah, back to you.
Thanks, Alex. That structural breakdown in crude oil, contrasted with the relentless bid in U.S. tech, finalizes our geopolitical unwind theme. The market is aggressively pricing out war premiums and betting heavily on secular growth. Looking ahead, this risk-on sentiment faces a massive fundamental test. Next week, traders will scrutinize the U.S. CPI report and testimony from Fed Chair Warsh. If the inflation data comes in hotter than expected, the immediate vulnerability is the Nasdaq 100 at that 30,032 level, as the current low volatility regime could violently reverse. Conversely, if inflation cools, expect the dollar's technical strength to be severely tested. That's all for this week's episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in, and catch you in the next episode.